warriors, and I mean warriors today. Okay, Ziggy. Hello, Patrick. War. Good God. What is it good for? Absolutely nothing. Okay, so here we go. Brink of some retaliation in Syria. I heard from Greg on Skype. There's all kinds of there's a tweet storm going on. I want to start off with what a friend of mine and follower on Twitter sent me. This is the GP, the pound index. It's normalized. So it's not just against the dollar, it's against the 10 most traded currencies. Rudy's pointed out it's a classic 3-drive to a top formation, labeling it a C or a 4 with a decline to come. And coincidentally, when you look at the weekly chart, we're right up here at the 200-week moving average. So pound could be vulnerable from here. It's not that I saw that much on the daily. You know, thought maybe we'd get one more high, but it's for the first time in a while it's underperforming the euro. So pound's a preferred short. In fact, I think there could be something somewhat dynamic developing in EG. So I know a lot of people, it's been boring, it's been a range. There's been no reason to do anything. But we did try and wash out down here, right? Took out all the stops under these lows and recovered and then pulled back, and we're putting in a higher low. I think EG is a good scalp, could turn into something more significant. In fact, for a long time, I've been saying it looked incomplete to me, EG, that we've had on the weekly 1, 2, and it's out of balance. Maybe we get a 4. I would say this would be one of the most unexpected trades on the board, would be a bull move in euro pound. Since the pound has really been the strength, I think a lot more people are bullish that. US dollar yen trying that 60 level again, trying to hold some moving averages, hasn't taken it out yet. Perhaps we dig in our heels here at 34, and it's because we never really reached objectives, although I know some people were looking for 107.5 to be enough. Everyone with me so far? And of course we have crude smoking. I think I'm going to be interested in hearing what Steve Vogie says. We haven't quite made a new high. In fact, I was talking to a couple of my mentees on Saturday, and I said this high up here was the exception because we never took out the stops of this high. Should do it now. We'll see what kind of follow through. I'll be interested in Steve's view up here, where he might be looking for spec shorts on the top pick. And also Steve was looking for shorts in the guppy. He talked about it yesterday. I wouldn't be surprised if he's in now. So he was looking at this, waiting, being patient. And we're getting a pretty negative day in most of the yen crosses here. And the way the yen is, pound is looking compared to euro, the guppy might be the one. Just one other comment. Earlier in the week, we got a pop in Aussie Kiwi, and it's given it up. We rallied to 50. Okay, so as you can see, even if we got a shot down to 105, 104.80, we'd have a divergence, and we'd have a 1, a 2, and a 3 down here at new lows on the 4-hour. We would diverge, not confirm, and to me it looks like it could be the same even on a 1-hour. So it's still trying to develop a bottom, and at new lows, it's still worth a shot to me. So we have the indexes down sharply, a lot of fear. We had Anthony Allen on yesterday. He said no, all clear for stocks unless we take 17.5 out in the VIX, and that's all the way down here. So we'll see. Tough chart. And that's about all I have for right now. I'm wondering what Blake's doing in the face of the tweet storm and an imminent, I'm not even sure if we've already done anything militarily. What's going on, Blake? You're much closer to the news than I am.
Well, you know, obviously there's a lot of talk right now. There was a recent tweet that came out this morning, and that tweet was basically, get ready, Russia, we're going to be dropping bombs on Syria. It's got the markets a little in disarray this morning, a little bit of risk off that we're seeing. Now, it's so funny because everybody's like mimicking his previous tweet from when he gave Barack Obama a bunch of
oh yeah, about letting people know ahead of time.
Right, like yeah, he said no dopey, I would not go into Syria, but if I did, it would be by surprise and not blurted all over the media like fools. So,
and in fact, he made a speech a week ago that we were getting out, and here we are a week later, ready to bomb it.
Well, I mean, obviously, if looking at the situation there, I mean, something's got to be done. But all I have to say is I'm happy I'm not the guy that has to make those decisions. It's probably not an easy one, and however, it's a little ironic how he
well, you're a different personality, thank God. So yeah, of course it would be. And also, you've been there and know what it's like, the life and death. He was never even in the service. He had bone spurs.
Yeah, I mean, I've smelled dead bodies, and I've smelled dead burning bodies in my lifetime. And I don't, it's not, and I've seen, soldiers in harm's way. I've been in harm's way. I've been under fire. I've taken shots, and I don't, it's not something that I aspire to put anybody else in that type of situation. But there are, obviously there's a humanitarian aspect to all this, and it's a tricky situation. I don't know what the right answer is either. I don't. But
what's the right trade? No trade.
There isn't much of one right now. We were just discussing this at the office. We were like, okay, well, what do we do here? Because, let's first of all, I'll tell you, I'm long a little yen. I'm short Euro yen, pound yen, and New Zealand yen from overnight, and I sold. Well, not the New Zealand yen. I sold that this morning, but the Euro yen. I was looking at a false breakout here. You see
your favorite.
See this resistance up here?
Your favorite.
The stop trend line.
Stop on a false breakout. Yeah.
Yeah. Right. So, and it's not like I have a huge position either. These are half-size positions for me because there's a lot of uncertainty out there, and I'm not 100% convinced that the yen's ready to take off, which I'll talk about here in a second. But you got the Euro yen. We had a little false breakout overnight. You can see the daily candle. We rallied right into resistance. We couldn't push above there. Where we end up today is going to be really important for me as far as the Euro yen goes. If we end up back below it, because you do realize we rallied above the 200-day moving average here, but we didn't close above that resistance. Oops, here, let me turn down the speakers just a little bit. So that has me a little concerned that we closed above the 200-day, but at the same time, and we closed above the 38% retracement. You can see here the 38% retracement. But the pound yen is a little bit different story. I know we had this big white candle, but notice how we rejected the 618 retracement. I'd been looking for, and if you follow ForexAnalytix and you follow like the pound yen, I've been looking for this path for a few days. And you can see like the 4-hour charts, and I've been updating the 4-hour charts as we go. I've been looking for a move to the 618 and a reversal. Well, we hit there, and we've shown a reversal on you can see the gravestone doji there, and we've already come off, maybe another 20 or 30 pips since I posted that chart this morning, right here. And I sold it last night as we were trading up at 152 because I figure, well, what's your risk here from a risk reward perspective? Risk above, and my stops are a little bit more generous than the 618 because I tend to go a little above the these numbers, and I did. Thank goodness, because I'm glad I didn't put it just at the high, because I would have been stopped out. So I tried to go a little bit past, these key levels, knowing that we might, like an Asian trade or early European trade, trade above it and then down. But the question is, how much further do we have to go? I mean, do we have, maybe down towards 150.50 before bouncing again? I mean, that seems realistic. If we do attempt to strike in Syria, the market, the stock market, we're down 22 points in the S&P, or 22 handles. If the market, drops another 20 or 30 points in the S&P, I'd be probably willing to buy, risk at that point in time. That would be my 2 cents. So, sorry, didn't mean to yawn on you. But if that happens, the pound yen could, be 100 pips lower and then bounce. That I think is realistic. But let's talk about the dollar yen, because the dollar yen, it came right into the resistance zone. Now, if you guys don't know, I know I've talked extensively about this resistance zone that we have here. The resistance zone basically is from 107 to 108, and the on a longer term basis, we're still broken down. I know everybody goes, oh, I read all this bank research every single day, and every single morning I've got 6 or 7 banks. I read like their morning, I read their, morning technical reports, morning, outlooks. Citigroup has this huge portal, which is, littered with FX crap. And I read all that stuff every morning. And, most of them are like, okay, if risk picks up, we might rally to 110. They're looking back at the 200-day moving average. I put a lot of weight on this breakdown here, and as long as we trade below 108, 108.50, there's no way I can be short yen. There's just not. I just can't do it. I can't physically do it. Not this close to resistance. Now, if we're down at 104, 105, I mean, that's a different story. When you're challenging some support, where your risk is. But at this point, I know my risk is above 108, 108.50. I mean, that's it. So as long and considering we are pushing the previous support, is acting as current resistance, and you look at the stock market. In the stock market, I mean, we've been up, now minus today. I mean, of the last week, we've been up 5 days. We may not have gone anywhere really, but the stock market is basically consolidating at this point in time. And if the stock market rolls back over and we get back below the 200-day moving average and closer to all this support down here, then that puts the dollar yen more closer to 105 than 107, and we're near 107 right now. So I'd rather look at these yen pairs as possible sell candidates. I look at the New Zealand yen. The New Zealand, by the way, has been the most god-awfully strong currency for, I cannot figure out the reason why. I know I've said this like for days in a row. I cannot figure out the reason why. But the New Zealand yen almost hit the 618 retracement, and we're showing a bit of a reversal here as we have some confluence of resistance. The Aussie yen, we haven't even bounced. The Aussie yen hasn't even hit a, whoops, that's not the fib I wanted. We haven't even hit a 38% retracement. It just shows you how heavy the Aussie is trading. The Canadian yen had a really sharp recovery. And I know several weeks ago I tweeted, when we were down here, I'm like, be careful of that, big in your face, counter trend move or whatever, however I frame that tweet. And that's exactly what we got. And if you look at the Canadian yen, we've pretty much exhausted the move out of the triangle. You know, we're near the 161% extension of the triangle. You know, we're testing previous support, should act as current resistance. So there's a lot of reasons that the Canadian, well, the Canadian yen may be done. Then if you talk about the Canadian in general, the US dollar Canadian, it's probably a little oversold on an intraday basis. We're near the 618. Yes, there's still more downside, but you know, it's definitely capable of a bounce here. So if the dollar Canadian can bounce because of some risk aversion, that's gonna pull the Canadian yen back down as well. Do I think the dollar Canadian still is gonna eventually make it to 124.50? Sure. You know, if I had to imagine what that could look like, it might look something like this. You know, it might look something like that. So, you know, if you guys are like, you know, short the dollar Canadian and you're like, oh, I expect it to move to 124.50. I do too, but don't think it's going to be a straight shot, especially after such a big move lower, especially over the last few weeks. You know, we very easily can bounce and consolidate before dropping again. So, you know, and that would suggest that the Canadian yen may see some downside as well. So those are just, you know, those are just things that I'm paying attention to right now with the Canadian. And also keep in mind that one of the reasons why the Canadian is so strong as well is that crude is so strong. Now you got crude rallying right up into, this is, I would say this is triangle resistance here. And here, let me go ahead and draw this. That's triangle resistance in crude. I don't know if I'd really want to be long right at this moment in time. We drop a few bombs in Syria and we launch some sort of missile attack. Crude might pop above the resistance here, but you know, one of the things that we have to keep in mind is Syria is not a huge oil producer as well. So you know, any move higher in crude might be short-lived, especially after we launch some sort of attack. And I'm saying that as if we launch an attack, not as we, or if we do, we may not. But yeah, you got to be a little careful with crude as we're knocking our head up against resistance. I don't think it's a short necessarily. I think if you're long, you just have to be a little bit more careful at this point. The euro continues to trade in no man's land. I'm pretty disenchanted with the euro at this moment. I don't have any, you know, strong bias on the euro US dollar. I think that the euro is probably going to find some resistance up here above 124, just like the dollar index is probably going to find some support down here around the 89.25 level. But
Get better.
Yeah, it should. I would think it does. But I'm not, like I said, I'm not excited about the dollar. I'm not excited about the euro. The pound, you mentioned a little bit earlier, Dale, we did challenge some resistance. If you look at the data from overnight, manufacturing production numbers were a little light, construction output was a little weaker, industrial production was weaker, goods trade balance was a little bit of an improvement, but overall the UK data was not impressive, and that pushed us right into resistance and reversed us. But am I super excited about the pound dollar as a short right now? No, because I don't have a huge bias on the dollar itself. Aside from the yen, I think the dollar yen's got more of the bias of what to do. But as far as the pound dollar goes, I'm not super excited about it. You could, from a risk reward perspective, you could always short it here. You can short it because you know what your risk is. I mean, that as a trader, that is the one thing that we can control for the most part. I mean, obviously there's situations you can't control, like when the Swiss National Bank dropped the floor and on the dollar Swiss. I mean, you can't control that 0.01% of the time, but 99.9% of the time you can control your risk. Yes, there's going to be a little bit of slippage if the market's really moving. You might not get the exact price you want. You might miss it by a few pips, maybe 5 or 10, but for the most part I can control my risk. And so if I look at the pound dollar right now, and I'll draw this out for you, even though I don't have a strong bias, I'm just giving you the argument for a short if that's what you wanted to do. You could short currently here where we're at. Your risk is here, right? And your reward is somewhere down here. Well, if you look at a risk reward, you're risking 1 to make, maybe 4. So from a risk reward perspective, it's a good short because your risk is measured, right?
Yeah.
And but when I trade, I like to match my risk reward with also a bias if I have it. And right now, like the pound, or more specifically the dollar, I really don't have a bias here. So I'm not taking the trade because my focus is actually more on the yen pairs at this moment. But if I wasn't in the yen pairs, would I take a short in the pound dollar? Possibly, because I know what that risk is, and again, as a trader, that's all we can really ask for. We're not guaranteed to make money. I've come off a pretty bad streak over the last week and a half. I've had a rough week and a half in this choppy market. I haven't been able to really put 2 and 2 together that well. But managing your risk is important, because even if you're off, you can say, okay, well, I risked $1,000 to make $4,000, or I risk $100 to make $400, and you're going to get stopped out from time to time, and sometimes more than you want. But as long as you maintain that risk reward, over time, as long as you're not wrong 90% of the time, you're going to come out ahead. This is like one of those situations for me as of late that I haven't been trading very well. So, I'm not right. I'm not right 60-65% of the time, which is probably closer to my average. And like my last 2 months have been spectacular, probably well beyond that. But right now, my batting average isn't that good for the last week and a half. So, when you take the risk reward, you're still going to have risk. You're going to still take some losses, and but you got to still always take those shots where you can make more than your risk, and that's important, and to have that consistency too. I know when I'm off, I've become a little bit more particular about what I'm trading, and until the market shapes up more to my liking. But we all have our streaks, but again, risk reward is always so important when you're trading, knowing that, risk 1 to make 2, risk 1 to make 3, risk 1 to make 4. Anyway, okay, so go ahead, Dale. You were going to say something?
Well, I just remember Gulf War 1. I know you do. And were you there at the beginning of it, Blake, or you came in a little later? And I know you weren't following the markets much back then.
No, I wasn't following the markets. I was actually 18 years old. I actually joined, for those of you that don't know, I joined the Marine Corps and the infantry to go fight in the Gulf War. I was 18 years old, and I knew we were going to war, and I said, well, I want to fight for my country. So because I was young, dumb, and full of
that too. Anyway, my point was, I was on the golf course, okay, when the bombs started to drop, and then went to the office. In those days, you didn't have the internet, and you had to get to the office to see where the markets were at. But actually, the reaction was the dollar and bonds and stocks rallied, oil and gold got creamed. I don't think we're going to get a similar reaction. It almost looks like the market's set up for the opposite reaction this time, but it was, and I think it happened again with Bush, when Bush went in, when the bombs started to drop, the dollar rallied, bonds rallied, and actually stocks rallied. So it's going to be interesting to see what kind of reaction we get once there is a military action.
If there's any type of military action, if there's a like the fear is already working into the market right now, so you probably want to buy the dip on any dip if there is, you know. That's typically
there was a big buildup to, you know, Gulf War I, you know, I mean, Schwarzkopf amassing all those troops. So it took months before the invasion happened. So the market was prepared. This really kind of just popped up a week ago. I mean, this week, because a week ago, the talk was we're leaving Syria. So it's a completely different scenario, but I just wanted to give a little historical background that not always when there's military action does the market fall apart and the dollar get creamed and gold skyrocket. So
yeah, and you know, most of the time you'll get the some sort of panic selling, you know, following you know, an announcement or any type of military action, and then the markets tend to stabilize, bounce back, and stabilize because, you know, it's not the situation in Syria is not going to have a material impact on our economy. So that's one thing that you gotta think about. You know, when you take a situation like and you know, a much different situation, but you take a situation like 9/11, that was at the heart of the financial markets. We were closed for 3 days, and then we gap lower and move lower for a few days. I mean, there was panic selling, obviously, and then the market recovered.
And we were already in the bear market too, you know, from the .com bubble. So it happened and just exacerbated the trend, rather than it, you know, changed the trend.
Right, exactly. So anyway, it should be interesting. What's going to be also interesting is the CPI data. So if you guys are looking for better dollar direction, the CPI data here in the next few minutes might give us a little bit better ideas of what to expect. And with that being said, I'm going to pass it over to my colleagues, Steve and Stelios. Guys, good morning.
Hey, Blake. Good morning, mate.
Good morning, gents.
Hey, guys.
How are you guys doing?
I'm good, mate. I'm good.
Good. Well, obviously we have a lot of potential action today, so I'm sure it's going to be exciting for you guys. I got to get hopping and get ready for the CPI data, but good luck, everybody, with the volatility. Keep your eyes and ears peeled, and you know, this is not a day that you want to step away from the computer for too far away from your compuper. All right.
Absolutely.
Good luck,
Absolutely.
Good luck, Blake. Your good friend Ziggy said you're still dumb.
I am. Thanks, Zig. All right, guys. Have a great one. Thank you.
All right.
Have a great one, Blake.
Thanks, Steve. Thanks, Stelios. Thanks, Dale.
Okay, as Blake said, first of all, to begin with, we have a lot of things to show. I think that you know, quite a lot of instruments are at key levels today, but I'm not going to go over them for the next couple of minutes because we have CPI data coming. Obviously, the market is very much focused on CPI. As we were saying yesterday as well, employment is already considered to be like a won battle, and you know, CPI is all that you know, the market is focused on due to the Fed being focused on it. I mean, it's the only excuse that was left for the Fed to be in a sense less hawkish than it could have been. We're expecting still a 0.2 month-on-month today and a 2.1 year-on-year, if I remember right.
For core CPI, that's correct. Let's also remind ourselves that PPI yesterday came in stronger than expected.
Came in stronger, indeed. Although it has a lag, although CPI lags PPI, so
absolutely.
Yeah.
But we have to remind ourselves that the dollar had been weakening since late 2017, and you know, that will eventually feed through to CPI.
Absolutely, due to prices of imported goods. Yes, absolutely.
Yeah,
absolutely. So yeah, that's definitely something that that should help CPI stay on the highs, theoretically speaking. Okay, we have less than 1 minute for the CPI. We're going to focus on the USD hen here on the bottom right. We're also going to be looking at the euro and the cable. And after the CPI reaction is over,
it all seems in line. core CPI exactly in line. CPI itself is slightly weaker than expected.
2.4 year on year versus 2.4. Real average weekly earnings though 0.9 versus 0.6 previous. In line, but to be honest, still in line with expectations being more or less on the high side of recent data, right?
It's going to be all about the minutes later today, though. But
so it's all about the minutes. Yeah. So
new lows and Dixie on this one.
Yeah, USD yen hasn't been really moving. Euro USD more or less the same. Let's have a look at the Dixie, as you mentioned, Dale. The Dixie is approaching, by the way, we saw this yesterday as well. The Dixie is approaching quite an important trend line support. Either you want to see this as a bear flag or you want to see it as a triangle, depends on how you decide to draw the upper trend line. Still, this ascending trend line here should act as support. If we break below it, things are not going to be good, especially if we have a daily close below, let's say 88.90, which means a lower low. That's going to be even a stronger indication that the DXY wants to push to new lows. Now, how low that's going to be, it's a different question, but definitely we've said this plenty of times. This recent price action doesn't look in any way as a reversal, as a new move to the upside. It looks to me like a bearish consolidation. Okay, so that's something important to keep in mind. Now let's start having a look at a few tickers that are at very important levels. So let me begin by having a look at gold, because gold is testing triangles resistance. If you remember, I said plenty of times that my intuition tells me that this should break to the upside. Of course, that also has to do with the fact that we came in from the downside. It also has to do with the fact that if you go back to the weekly chart, because many times a weekly chart puts things into perspective, there are two things here that that somebody can pay attention to. One is that we had broken above this descending trend line a long time ago, which was for a long period of time very important to the market. And the second one is that even if you see on the weekly, this looks like a flag of some kind, and we're currently testing resistance. So I think that gold is at a very, very important level. Personally, I would like to see this break to the upside happening. I mean, it matches my bias of what it would do in the medium term. And I do think that if we see a daily close above 1355, but as Taylor said, we should also wait today for Fed minutes, before making sure that gold is breaking out or whatever. I do think that we should at least push higher towards 1400. And to be honest, let's just make the assumption that we're going to get that happening, and let's see some upside targets. So we have the 127.2 at 1383 of this triangle's range, let's say, and we have this 161.8 at 1405. I think that's quite a nice level to target, the 1405. So I really believe that this can easily be the case, but we do need to see a daily close above 1355 to confirm. Now, silver is not at such an important level, but is also testing a trend line resistance. I'm saying that this is not such an important level because, oppositely from what we've seen in gold, even if silver breaks out from here, that does not change the fact that it remains in a broad consolidation. You can view this as a triangle, as a long-term triangle, but no matter how you see it, it's definitely in a broad coiling formation that has been going on since 2016, right? So oppositely from gold, silver, closing above here might, of course, produce some follow-through, perhaps towards this descending trend line resistance, but still that will not indicate some kind of a major breakout, right? So obviously, if you have to choose following one of the two moving, out of or breaking out of equivalent formations, the gold is the one you should be following. Now, having to do, because I also had a lot of questions about palladium in the chat room as well, asking if this is a good place to be sorting palladium or whatever. I'm going to tell you that, yeah, sure. I mean, this can work. I mean, we're at the 38.2. We're also testing the lows here. So yeah, sure, palladium can resume to the downside. But the reason why I had a 910 target and then I revised it to 901, which barely got hit, and now I'm flat, was the fact that we had a confluence of supports here. And even if you see at the weekly chart, because having a look at the weekly here is quite important, the 900 area was a critical area. You can see here why, because it was that previous high, acted as a resistance once again here, acted as support later on, acting as support once again. So now, two possible scenarios, obviously, here. One of them is perhaps even moving a little bit higher, retesting this broken channel as resistance and resuming to the downside. But I would have to tell you that I would remain quite cautious, first of all, because this is a very bullish weekly candle so far. Second of all, because as I said, 900, the 900 area, 900 to 910 area is a very, very strong support area. So personally, I'm flat, and in all honesty, I'm not looking to get involved yet again with palladium. But regardless, which coincides a little bit with the other two metals, we do see a very good reaction higher from palladium from these levels, and this is something to note. Now let's go ahead and have a look at copper, because copper is also is about to test a very critical area of resistance. It's actually the confluence of the 61.8% fib of the, I'm gonna keep assuming that this is a corrective move lower. So the 61.8% fib of that move lower and this descending trend line resistance. So we've seen that it's been a long time that copper has been producing strong moves to the upside and then cool down periods, in a sense, that usually take the form of consolidations or of slow, choppy corrections before producing another bullish move and so on and so forth. So far, we have no reason to believe that this is anything different. Bottom line, I think that if we do break this 61.8 here in the horizontal resistance and the descending trend line, I think that we should extend to the upside once again. So in essence, all metals look good for breaks to the upside. Only thing missing is confirmation, which it's quite important to have in mind, because depends on what happens with Fed minutes today. That might even come today, right? So we have to be prepared for such an event. So it's one thing if we get a reversal from or a rejection from these levels. Let's assume that minutes today trigger some dollar strength or whatever, and we see reversals. I mean, sure, perfect. That's a great area to get rejected once again in almost all those metals we were looking for. But on the other hand, if Fed minutes do not do something like that and we do get confirmed breaks, I think that the chances of a decent follow through are very high, and you need to plan ahead according to what you have in mind. So that's the first thing I wanted to have a look at, the metals. And now let's have a look at crude, because I think that crude inevitably will break. I don't believe in triple tops or quadruple tops or triple bottoms or whatever, not because they cannot happen in a market. Of course, anything can happen in a market, but because statistically speaking, those are, the chances of such events are quite remote, right? So I do believe that, seeing this move once again and seeing crude consolidating above this broken trend line resistance, which has been acting as support, is more or less. Yeah, go ahead,
Just
Dave.
one thought. just one thought. At the last high in crude, it's really the exception. It didn't take out the stops of the previous high at the beginning of the year. That should have been the market tell that it wasn't done, because look how it gave bears hope over that high that was going to fail again. I was one of them, but I guarantee you they're going for those stops now, and there's more than one there.
Oh yeah. I also think that it's a very, very, very high scenario. You know, the move lower, despite having 2-3 strong days, was still a channeled correction. And you know, the chances
But it was
of breaking
at that last high that they didn't elect the stops over the December, January high. That usually doesn't happen. Those algos usually go for those.
Indeed.
Yeah,
so I think that
really set up the bears here.
Yeah, and I think, you know, a push higher towards at least the 127% extension at $69, or even the 161.8 at $72 roughly. I think those are good, valid targets. Especially Blake mentioned it. Especially if we start getting, you know, some conflicts happening in the Middle East, even due to let's say a reflex kind of the reaction from the market, we should see crude getting bid. Now, if that's going to be short-lived, you know, we're going to see. But to be honest, personally, you know, I would like that scenario because personally, I would like to see some kind of a top and a larger correction after another push to the upside. I mean, that's what I'm going to be. That's what I'm going to be looking for. I would love to be short, you know, roughly at 70, 72. If I see some big type of reversal there, I know that the market has spent, you know, the past few months being most of the time like very bullish crude, and positioning shows the same as well. And I think that at some point when we get a big reversal, you know, it's bound to be more or less violent and produce, you know, some very nice moves to the downside. But so far, you know, the only thing I can say is that crude is also an instrument that is almost testing resistance, and it also looks very, very likely that this time it's going to make the move. Okay, so keep that in mind. And you know, for those that have been watching us daily, they know that this comes as no surprise, right? I mean, Gregor has been talking about it. I have been talking about it because mostly the two of us have been talking about crude. And you know, I think it was something that was more or less obvious. I mean, from a technical structure. Now, let's have a fast look at the bonds, and then I know that Blake already covered plenty of the FX pairs. Let's have a look at the bonds, and then we can go through questions and see what people want to have a look at, and we're going to do that. So let's have a look at the treasuries. Treasuries remain in some kind of a corrective consolidation. They still look very, very weak. I think that even if the rebound extends to 123, 123.20, that's going to be a move to sell. Even, you know, the RSI shows, you know, that this is definitely not a bullish move. It's more or less a corrective move. So, you know, I don't know is this a broadening formation or whatever. You know, I have it as an expanding triangle for now. It might prove to be something different. Doesn't really matter. Still, this is a correction, a very weak correction, and I think that, you know, something spectacular will have to happen for this to start appearing to be something different. So I still believe that people should be looking for opportunities to be short and not the opposite. And another look at the bonds, I have to say that I was expecting perhaps that 61.8 would reject. I have two fibs, one drawn from here and one drawn from that high. One, let me mark it to be clear, one from this high and one from that high. If you see, that was a very nice area because it was the confluence of the 50% fib from this move and the 61.8% fib from this move. So when you have confluence of resistances or supports, the good thing is that they give you very nice entry levels. In this case, I did not take this short. I'm just saying that, you know, I was monitoring this as an interesting opportunity. If you took that short, it would have been a very good entry point. But I have to say here that, you know, you would have found yourself in the money, but the move we've been seeing since is not a reversal, right? So nice entry, but does this look like the price action you're expecting to see in a reversal? Absolutely not. So I have to say that the boons look to me like they're consolidating, and I think that that should produce another push to the upside before seeing a reversal. So I'm the one advocating, you know, for a short opportunity in the boons, but you know, I can't force the market to do what I have in mind. I have to try to read the market for what it's doing, and I'm telling you that this looks to me like a short-term consolidation, which should resolve with another push to the upside. But that doesn't change the fact that I will still be looking for a reversal, you know, after seeing a new high. So, you know, this is, so we're obviously seeing some kind of a divergence, right? You can see how much stronger the rebound in bonds has been in comparison with the rebound we've been seeing in the treasuries. Okay. So one last thing, because there was a lot of discussion in the chat room about this as well. You know, this is the pound yen. We were talking about it yesterday. I said once again, we had a question. I said that, listen, nothing has changed. I'm still looking for a reversal here. And, you know, that's the case. Let me show you the 4-hour chart I posted some hours ago on the chat room.
Good patience. I'm waiting for your entry up there, Steve.
It's this one. So you can see here that, you know, we had a little overthrow from this trend line. We hit the 61.8, and this is a very, very nice place for it to be rejected. So now the question is, okay, is this a confirmed reversal? Absolutely not. Not yet. Okay. Regardless, I think that it's a good signal. That's why, and if I make it, I made it. If not, I'm fine with that. I've already put a short in order to go short at 151.60. You know, I would love to be short there if we see like a rebound from here to 151.60. I would like to be short there with a stop above the high. It's a very, very tight, you know, risk. And, you know, at the even if this is not a true reversal, it still has a decent potential to at least come once again and retest this trend line. So even if that's the case, the reward to risk ratio is extremely appealing. So I'm perfectly fine with making an attempt, right? I'm saying an attempt because always when, you know, when you're trying to catch reversals, you know, you have to approach it as a low probability scenario. You know, can be 30%, 20%, 40%, depends on how good you are and sometimes how lucky you are. Okay, so I'm liking this rebound that I'm seeing from the lows, because, you know, what is it, 12 pips higher from here, I have my order to go short, and I will be more than happy to get triggered. Let me go back to the dailies, and we can go ahead and have a look at what our friends want us to look at. And this is the daily perspective, right? You can see it here. Not exactly confluence, but the 61.8 is here, a little bit higher. We have horizontal resistance. So in general, we've entered today by touching the 61.8. We've entered a very a good area for a possible rejection, right? And I do still believe that the move higher is not an impulsive one, while the move lower looked like one to me. Okay, let me open the question box and see what we have here. Okay, let's go. New Zealand is an island safe haven in case the world implodes and self-sufficient. I guess that was to the comments Blake made. I want to say I really appreciate this webinar. It happens daily. It's a privilege to listen to this forecast and assessment. Dale and Blake are especially great commentators. After Blake logs off, the quality of the commentary diminishes. Okay, that goes to me, I'm guessing, but you know, I'm open to all comments. But please keep up the good work. Okay. If Cat is strong,
I disagree with that statement.
it's okay, mate. You know, I'm 100%. I am 100 believer.
He has his opinion, and
Absolutely.
I have mine.
And
I disagree with it. I learn from you every day.
And I have no problem reading all opinions, in all honesty.
In fact, I have your poster on the wall as one of my idols and mentors. Okay? Just want to let you know, bro.
I hope not the one I'm wearing a bikini, right?
No, I love to eat.
Blake, you took part in Gulf War 1 or 2 is a question. I think 2. Please enter copper in your analysis list. Oh, you mean as a covered instrument in ForexAnalytix? That's not a bad idea, actually. We might actually do that. Copper is an interesting metal. Very often it leads the way, or it points the way for other instruments. We've considered it in the past. We might actually do it at some point in the near future. So I make no promises, but in all honesty, there is a good chance that will happen. Check out gold. We already did that. Hi Stylianos, hi mate, hi Abdul. Okay, could you please look at Euro Swiss? Absolutely. Actually, thank you for reminding me. I've been looking at it, but you know, I didn't happen to have mentioned it. You know, it comes as no surprise that Euro Swiss is pushing to new highs. If you remember, I was talking about it breaking out since 109. And you know, I said that more or less it is inevitable that we're going to get back on the floor at 120, and you know that remains the case. We had a little triangle. I said that it should push higher from there. We had the end of a correction in a triangle. That's a very rare thing, I have to say. When I saw this formation, because you know, every rule, in quotes rule, has exceptions as well. So when I saw this formation, I really thought that we're going to get one more leg lower and then resume to the upside. Otherwise, I would be looking to buy it. So if I saw something like this, and then I saw something, you know, like a bottoming formation, I would really be interested in buying the Euro Swiss. But you know, we found actually a low in what appears to be a triangle, which is, as I said, very rare. Triangles are usually continuation formations of the previous moves, and you know. That's it. I think 120 is coming. End of story. Now, let me be clear. 120 is going to be a very, very tough level to crack. Okay, I'm not saying it can happen, but I'm saying that 120 is going to be a very, very important level. It was for years the imposed floor from the S&P. There is definitely a lot of open interest up there. Others being short or others being long, and they will be more than relieved to close some positions, you know, without a loss. So I do think that 120 is going to be a very critical level here. Now, what should you do until 120? I think nothing. I mean, would I be buying here ahead of 120? No. Would I be selling yet? You know, only if you care to do it in increments, like scaling in and then expecting some kind of a reaction, at least a short term, from 120. So if you want to start building, let's say, a position towards 120, being more heavy, you know, the closer you go to 120, and then looking for, you know, for booking some profits out of a reaction, only then. Otherwise, you know, I would watch what happens from 120 and take it from there, because we are already too close to that. Okay. What's about cable? I don't. If you mean Stelio, I don't think we had any news that have been moving cable today. Am I right on that? Because I didn't see anything.
We had the revision of the NISR. They revised the GDP estimate down from 0.3 to 0.2%. That was it.
Yeah, but yeah, nothing, you know, ground moving or
nothing major.
Whatever.
No, nothing major. No.
Yeah.
I think, like you guys said, cable hit resistance and it just snapped back from there. Seems to be what happened.
Peter is asking if the webinar is recorded. Okay, now listen. Every single webinar is recorded. If you go to YouTube/C for channel /ForexAnalytix, as you see me writing it here, you're going to get yourself in the ForexAnalytix. Now I'm in the side of the admin, doesn't really matter. You're going to find yourself in, let me also copy. I'm going to copy this text. There you go. So this is our channel on YouTube. A couple of hours, maximum 3 hours after the webinars, interviews, and whatever else we do are over, those are being edited and uploaded there. So you can always find them, even the oldest ones. So, you can always visit if you missed any and, watch it later on.
Over 200 interviews in a year, Steve.
Absolutely.
200, and there's a wealth of information. In fact, you know what? We should package it.
Yeah. To be honest, To be honest, there are some amazing interviews among them. Amazing. I mean,
in fact, Kip is in the room, and my expectations are for another great one. So tune in. But yeah, 200 interviews, and a lot of really great guests. So. The interviews have been, we're always part of our plan to build up and edify traders by bringing in outside people. And you know what we do that no one else does? We don't care if they get business coming here. Okay, most people that have a subscription service, they would never bring in what they would consider a competitor. We consider an ally. Isn't that interesting?
Yeah, absolutely, because it has to do with we believe in our work. We really believe in our work. I mean, we believe that people that come to us find value in what we do, and that's why we're not worried about it. And in all honesty, we really care about the good of the best for the community. I mean, if some people don't find value in what we do, sure, I honestly, wholeheartedly hope that they're going to find value at somebody else's work and help them succeed in what they're doing. In all honesty.
Yeah, people on Twitter say to me, Steve, Dale, why do you tweet other people's work or bring in people that, have services? You might lose a subscriber. And I say, well, they needed to have a different experience.
Yeah,
that's
absolutely.
all. And absolutely. Sometimes you don't know what you have until you don't have it.
And something, I'm not going to lie to you. I never happened to have such a conversation with any of the users I'm going to mention. But I have to tell you that we have had users that have come to us, they subscribed for some months, then they stopped. And some months later on, they came back again. My guess is that they tried something else and they realized that, this is the place to be, because we have quite a few of those. I never asked, any in particular, but, that's my guess. Anyhow, thank you all for your kind words, about the other guy's comment, but in all honesty, thank you very much. I do appreciate it, and I know that many of you find value in what we do. That includes me as well. Aussie cat bottom, copper is testing resistance. Oh yeah, we've already done that. Craig, we already had a look at copper, all the metals actually. So if you want to go over the recording, I started by going through all the metals. I think the vast majority of them are on resistance, and quite important levels. If we do break above them, if we do see daily closes above them, especially following the Fed minutes, I do think that we're going to see follow through in the upcoming days or weeks. Let's have a look at the Aussie CAD, as our friend here requested, and I guess more or less it's going to be time for your interview. Okay, now the question was, has the Aussie CAD found the bottom? I have no reason to believe so, is the answer. Simply look at this, the strength of this move lower. Are we on support? Yes, we currently are on support. But do we have any evidence that it's reversing? Absolutely not. I would actually probably be looking a little bit lower, because you see there is an important trend line that more or less coincides with this horizontal area of support. So it wouldn't surprise me if we break below here and end up finding support somewhere roughly at 96 60, 96, 70. So it wouldn't surprise me if it continued lower a little bit before getting a reversal. But regardless, even if it finds support here, which it can happen, I mean, this is a horizontal area of support. I think that we need a lot more evidence to call it so. Okay, so you know, in my opinion, don't jump the gun. Be a little bit careful, or at least make sure that you have a tight risk, because there is a chance that we're going to move lower from here. Keep in mind though that, as I showed before, OZCAD remains in a long-term consolidation. It's coiling, but in the very long term. So there is no real direction in the long term. I mean, you should be looking for shorter term moves, regardless of what happens, unless we finally break out of one of these two trend lines. Then you can be looking for an extension. Thank you, Amir. Thank you very much. Thank you, everybody, for your comments. Sunil, we're going to have a look at the Nifty tomorrow because I don't want to bleed more into the interview. Okay, Dale, you said you're ready to begin, correct?
Yes, partner.
Okay. Have a wonderful interview.
Okay, Kip, welcome to FACE. I'm going to make you a panelist because I don't believe you brought anything that you want to screen share. And then I'm going to take control of the screen, waiting to hear your voice.
Wait, can you hear me?
Got you, Kip. Hold on a sec. There we go. All right. Kip Herridge, welcome to FACE. How are you today, Kip?
Hey, very good. Thanks for having me on. Quite the honor.
Yeah,
I was very impressed with what you guys had this morning.
Oh, thanks so much. Yeah, well, we believe in the team concept, and I'm impressed. I do due diligence, and I went to your website and I checked you out. And before we get into the guts of the interview, Kip, we can't avoid, what's happening here. I know you're 70% fundamental, 30% technical, and I'm curious as to whether you can quantify the fundamental event we have with a possible missile strike in Syria, or it's unquantifiable.
It's largely unquantifiable, but I think that if you're Russia and you see Trump's tweet this morning, you can take it as a tweet from a madman, or you could take it as a tweet from the military-industrial complex, knowing that that's what ultimately is backing Trump up. So if I'm not mistaken, we've bombed the crap out of 8 different Muslim Middle Eastern countries in the last 15 years. And I don't believe Russia's bombed anybody. So, that's the reality as I see it.
Okay. So, Kip, I read a little bit about your background in the business, which is so impressive, and you're a very aggressive newsletter writer, and your results documented are, mind-blowing. Okay. Tell me how it began for you. Were you in high school or college and started following the markets? Was it your dad? I'm guessing that because you're from Sugar Land, Texas, that perhaps you may have started watching things like commodity markets before even equities. Am I right?
Well, you're exactly right. And the first time we talked, very perceptive. By the way, Dale, I've got a pretty bad echo on mine. Can I do something to remove that?
Am I echoing or you are?
I am, not you.
Okay, I don't know. You called in, right? It's over the phone.
I did.
Steve, can you help us with that? The echo? I guess.
Hey, I can work through this.
Okay, I guess you're going to have to live with it, man. We're hearing you loud and clear. All right,
okay,
no
good.
echo here. Okay.
Yeah, so I'm actually from a little town called Elkhart, Texas, population 900. Grew up very lower middle class. Dad worked for the prison system. It was we were surrounded by commodities. All the commodities we didn't have, and including money. And so that was my thought process growing up. Is that I don't want my kids to have this life. I want them to have whatever they want. And so I knew that I had to get to New York. And so that's my dad bought gold at 900, close to $900 an ounce, 870. Right, he top ticked the market.
When the Russians invaded Afghanistan.
Yes, and I was in the meeting with my dad and his broker when my dad's broker talked him into buying gold at the very top. And
Yeah.
of course, it was a bear market for 15 years. So, following that, I after I graduated from college, I found my way to New York. I had two great mentors, Michael Metz, director of research at Oppenheimer, and Ted Parsons, a local Houston guy.
Yeah, Michael Metz, I used to love when he would come on. I think in those days it was Financial News Network. So, yeah, Michael Metz, really intuitive, great technician. The other guy I'm not as familiar with. What was his name and where was he from?
Ted Parsons, here locally at a firm called Underwood Newhouse, and an old Houston bond firm, and he was my first mentor. But both of those guys, their mentors worked in the markets during the Great Depression. So I grew up on those stories.
Okay, yeah. So you probably read Livermore's book, huh?
Absolutely, and I've got it. Matter of fact, got it sitting right here on my desk. And also, Michael Metz told me the first book I needed to read was Extraordinary Popular Delusions and the Madness of Crowds. So I've been a contrarian at heart since I got into business in '85.
Okay, all right. So I have your Kip Herriage page up here, and also have your Vertical Research Advisory page up here. So I was reading some of your recent commentary on this page, and you are contrarian right now, Kip, because you're very constructive on the market. I'm assuming you did bring up the potential double bottom that may hold here to give us a moonshot into earnings. 1 day's action with the S&Ps being down 20 handles today doesn't change your view, does it?
Not at all. If we break the double bottom, I'll be more concerned. If we stay, the way my investing system works is if we stay beneath the 200-day moving average, and I am a trend follower, if we stay beneath the 200-day moving average in the S&P 500 for more than 5 trading days, my stops will be hit at that point.
Okay.
And I don't expect that's going to happen.
Okay. So interesting, you brought up, I saw the YouTube video on your site, and you brought up the miners, and we have a lot of activity, gold threatening a weekly breakout, etc. I don't know about you, but I was always taught that the shares should lead the way rather than the commodity. You look for leadership or relative strength in the miners compared to the bullion. Instead, it's been the other way around for months upon end here. Are you seeing the same thing, or do you think that you could still be long the miners even though they've been the laggards compared to bullion?
It's really been breaking my heart, because I've been in the second ever newsletter I wrote after I left Wall Street and started the VRA in 2003. In my second update ever, I recommended gold and silver. Gold at 275, silver at 475. And so this recent action in the miners over the last year or so has been really disheartening. And I'm with you. Until the miners start to lead the metals, it's hard to be bullish. But I will say it's nice to see them up, getting closer to the 200-day this morning on GDX, which is I think will be a major plus.
Okay. Let me ask you this: because you're a fundamentalist, do you think some of the reason is balance sheet problems for some of these miners and maybe too much leverage? Or how about geographic location of, huh?
How about manipulation? Okay. I know the guys at GATA pretty well, the Gold Antitrust Action Committee. I'm sure you guys all know them here as well. And I've known those guys for about 20 years. Their work is solid. Gold and silver have been grossly manipulated. And if you can tell us when that's going to end, then we can know that gold will be about $5,000 an ounce in the next 1 to 2 years.
Okay, so Jim Sinclair opened that exchange, I believe, in Shanghai for gold emancipation from the paper. So right. Cash and carry. and he says the same thing as far as targets. So what do you think could end this type of manipulation? And I saw a COT chart, and this is the first time large specs have been net short silver in I don't know how long, and wonder if you have a view on the silver gold ratio, which is not at but close to historical extremes. If you think that perhaps on the next wave, because you're bullish, the global synchronized economy in the US, that silver being more of an industrial might outperform gold on the next move.
I'm not an expert on those ratios, but I've read everything you're talking about. I think we can both agree when these finally break out, they'll be gone. As far as what might precipitate that and the elimination of this manipulation, honestly, I thought President Trump was going to be the answer to that. I believe he could be the answer to a lot of ending of manipulation. Been a little disappointing so far, but I still think it's going to happen in his first term. I think we'll see gold have a rocket ship move higher.
Okay, so let's get back to what you're saying in VRA and what I read yesterday and your bullish stance. A lot of it based upon fundamentals. Are there sectors within the market that you favor? And what I also found interesting is that when it comes to diversification, you're never in more than 12 stocks at a time. You love concentration of potential and risk. And I'm wondering, what are your favorites in here with what's going on? And obviously, I think you're looking for new highs in the market. Why don't you give us your view on current market structure and what sectors you like in the market now?
Michael Metz taught me when I was about 28, 29 years old, over diversification was the easiest way to lose clients. He said you gotta have big balls. You gotta be smart. You gotta find the right sectors, then the right stocks, and you gotta go heavy. And so I've always believed, even with my clients, Wall Street, I've always believed that I'm gonna have my clients in no more than about 10 to 12 stocks. And I'm very aggressive. I make that known up front. And if they want diversification, they should probably buy an index fund away from me to balance the risk that I bring to the table. Having said that, I beat the S&P 500 14 to 15 years and did 37% last year. So as far as the where I am right now, I love the biotechs. I believe there's a wave of money coming back into the U.S. Much, if not most of it's going to find its way into the biotechs. If you look at the bullish, the ascending channel in the biotech like XBI and BIB, it's one of the prettiest 2-year ascending channels that I've ever seen. So I think every time it hits that lower channel line, which it did 2 days ago, as a screaming buying opportunity.
Give me that symbol. Give me that symbol again, Kip.
XBI. XBI is the S&P 500 biotech ETF.
Okay.
And if you're like me and you're aggressive, you would buy the 3-time leveraged biotech ETF, which the symbol there is LABU. I use leveraged ETF exclusively to crush the markets as often as possible. And again, it's about buying it right, keeping a stop so you don't get hit more than about 7 or 8% in case you're wrong on the timing, and then riding the wave. And I believe by the end of this year, my target for the Dow is 30,000. That's been the case for some time. I wrote a book that I finished about a month before Trump was elected that said if he was elected, we'd have the greatest bull market since Reagan, and it's all based in tax reform. Remember, Reagan's tax reform took about 1.5 to 2 years to really find its way into the markets because of the way it was structured. Over the last 6 years, the Dow Jones more than doubled, and we'll see the same thing with Trump's bull market.
Okay, does that equate to about 4,000, 4,200 or so in the S&P?
Yes, it does.
Okay, because some of the super bulls, I know that's their target. That they have a different view after that than
yes, I do too.
Stated. Maybe these tax this tax package here is a little bit more front-end loaded, that it won't take as long to take effect as Reagan's did.
That's what's being underestimated by most people today. They have no idea the power of this tax reform. And we may not see a lot of it in Q1 earnings reports, but watch what happens in Q2, 3, and 4. As we know, the market anticipates 6 months out. So if we see any weakness on Q1 earnings, that's the best buying opportunity of the year.
Let me ask you this, knowing you're a bull and knowing that there are reactions in bull markets, really none until the recent event, you know, when VIX went to 50 and we have a different volatility regime. Do you also take positions in bearish 3-time ETFs ever?
Yes. It really doesn't matter to me if we're in a bull market or a bear market,
Okay.
but I only trade one side of the market.
All right, what are some of your favorite bearish ETF, 3-time ETFs to trade? When, I'm not saying it's to do it now or at any time, but what are a couple that you like to trade?
Well, I always stick to the major indexes, and so that would probably be like a SPXU, which is a 3-time short S&P 500.
Right. Okay.
And honestly, I'm kind of blocking those out now because I'm so focused on just one side of the market being long.
Okay, so your take on oil, being a Texas kid, and what's happening now, challenging the recent recovery highs here. You have a view on that, and a way to, are you participating since up until maybe a week ago? Oil's been going up, kind of like gold. Gold going up, the share's doing nothing. Same thing was happening with oil going up, and the shares up until maybe a week or so being comatose. What are you doing in there?
Well, I was out of oil at 100 as all my Houston buddies were starting new companies and leveraging up, and now many of them are out of business. I went long at 32 and still very long here. I have a focus on small cap companies. This is, again, kind of my approach is I like to get to know small cap companies, 100 million to 3 to 4 billion in size. Get to know them, the management, invest for the long term with these companies.
Yeah, you're a real grassroots kind of gumshoe guy. You remind me of Sarge on CNBC. I mean, he goes to the company and he meets the people and he talks to employees. I mean, you do on the ground type of research that most people won't leave their workstation, and unless they have a chart with them, they feel they have anxiety attacks. So you still do that, huh? You still go to the companies and try and know management. Do you ever bet on companies strictly on management? I have a friend who does a lot of mining shares who, you know, the CEO is a jockey to him. And, you know, anything that McEwen does, he's pretty positive on it. You do that too?
Yeah, one of my best returns of the last 3-4 years was Ivanhoe Mines, and I bought that strictly because of Robert Friedland, and bought that at $1.50, sold it at 22 in 9 months, and that's because I got to know Bob Friedland. Not many people did, but I met him at an event, got to have a private lunch with him, and anything he's involved with, I want to be part of.
Okay, so let me ask you this: what's your most important trading rule for yourself when it comes to risk management?
Position sizes.
Oh, beautiful. I wrote a song, Use Less Leverage. Okay, so trade small, and do you scale into positions, Kip? Or, you know, I try and tell people it's you know, don't expect perfection at the crab table, and personally, I have a tendency to be early, so I always piece in when I'm scaling into ETFs instead of going all in and all out. Do you believe in that? And do you ever take partial profits?
I play for major wins, and I do scale in. I never average down. I average up only. And I like to think that if you understand the combination of the fundamentals and the technicals, and you can block out sentiment, taking advantage of extreme sentiment to be aggressively long or short at those extremes, That's where the big money's made. And the other positions, I'm a long-term investor, like a Peter Lynch. I've owned one stock for 10 years, and I probably own it another 10.
Okay. I just want to get back to oil a little bit. As you can see, Kinder Morgan, some of these types of deals, or an ECA. So even though crude's been rallying, a lot of the shares have not. So you go to small caps. What would be a small cap example for participating in a oil bull market?
I'm going to give you my top pick in this space here, and it's a company called Falcon Oil and Gas. It is a penny stock. It's at 30 cents a share right now. The symbol is the U.S. symbol. It trades on 4 exchanges internationally. Okay. U.S. symbol is Frank, Oscar, Larry, George, Frank, FOLGF. They have what is probably the largest natural gas discovery, unconventional, outside of the U.S. ever. It's in Australia. And their partner there is $12 billion Origin Energy, the largest energy company in Australia. And they've already proved up at least 6 trillion cubic feet. But my belief, and I know this company really well, I helped take them public. My belief is that there'll be 50 to 70 TCF when it's all proven up in the next 2, 3, 4, 5 years, something like that.
There'll be what, a 50-cent stock, 70?
No,
70.
I'm sorry, that'll be 50 trillion cubic feet of gas. Oh. And this stock, unless they sell the company, which they probably will, it's a minimum $3 stock, but it could be a $10 stock depending on timing.
Okay, and you prefer that over something like a Chesapeake, which is out of favor.
Absolutely. And
is Chesapeake
I knew
problem?
Aubrey McClendon pretty well. And I used every opportunity to short that stock instead of buy it. Of course, he's no longer with us, but
right. Okay, and they have all kinds of issues. That's why it's fallen out of favor, balance sheet issues, etc.
Yeah, I avoid companies with a lot of debt and management problems.
Yeah. Okay. What a great interview, Kip. I really appreciate you coming on, and I want to encourage people, if they want to follow you on Twitter, that they could follow you at KHerridge. Here you go. Here's Kip on Twitter, right here. And here's his website, kipherridge.com. Here's his handle. And I believe Kip has a 14-day trial. Trying to make a nice commercial for you, buddy. So here's your free trial. And I really enjoyed talking to you, Kip. I had no idea. I reach out to people. There was probably some tweet that you did that caught my eye, but I'm glad that our paths crossed, and I'd like to have you on a few times a year to keep in touch with you. And like it or not, you're now my trading warrior brother.
I am honored. I followed you for years on Twitter, and it's a real honor to be here with you. Thanks so much, Dale. All
right, Kip. Good hunting, everyone. Kip Herridge. Follow the guy. Check out his newsletter. And yeah, Kareem, I guarantee you he's probably following some uranium stuff. Aren't you, Kip?
Absolutely.
Okay. All right, everyone. Have a good day. See everyone tomorrow. Good hunting the rest of the day. See you in the chat room. And remember, above all, don't just count your pips, count your blessings. I count working with you guys every day as one of them. Meeting a guy like Kip Herridge and sharing intelligence with the community as another. Good hunting, Kip. Thanks once again for being with us. You're very welcome, Dan. You're very welcome. See everyone tomorrow.